Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at some bulletin board hero stocks on Monday, October the 20th. And I'm starting off with African Consolidated Resources, which was difficult to resist really from a technical perspective on the basis that the RSI here went down to well, I suppose actually as low as 5 out of 100 on the scale. And we also saw the shares bounce off the floor of a falling trend channel from the middle of last year, from June last year as well. The floor there around the 4.5 pence level, and also the RSI, anything under 10 really is extremely oversold and does uh, hint at a reasonably sharp rebound, even if that's not sustainable. So the view now is that at least while there's no end of day close back below the 2013 support line, we could see African Consolidated head back towards former March support, old support over the next 1 to 2 months. If you're cautious on the shares, maybe you'd wait for an end of day close back above, say, the 10-day moving average, say probably 1.8 pence plus. But at the moment, it looks as though with this extreme RSI, extremely weak RSI that we have, there will be a positive reaction of sorts over the next few sessions. Next up is Friday's most traded small cap, or actually most traded stock in the market as a whole, and that was Beacon Hill Resources. Here we have a rebound, which is we already had a bounce off this April wedge formation. Failure at the 50-day moving average. It looks like the shares are going to have another go to try and break out of this wedge. The top of the wedge currently towards 0.3 pence. That's the target over the next month or so. There's also rising September RSI support line there to back the idea of recovery. Obviously, the stop loss probably 0.1 pence, which is the floor of this wedge. So risking 0.03 pence in order to make another 0.17 pence, or to effectively double the share price. So worth watching this situation. Similar formation, also a very highly traded stock, and it's Gulf Keystone next. Here we have a falling wedge from March this year, support line going towards the 42 pence level. We thought, well, there could have been, the thought was that the shares could actually fall below 40 pence, but in the end there was a turnaround to 42. We've recovered the area of the 10-day moving average at 51 pence to end the week, and that's a sort of minor bullish signal, as is the rebound of a falling RSI support line from June. On that basis, you're probably looking for a retest of the former August support, the old year low at 61 pence, even if the shares fall again after that. There is also maybe a 50% chance that this wedge formation will be able to carry Gulf Keystone back towards a more sort of substantial rally, maybe towards 80 pence, which was the early September support area. And the other view would be that only back below 40 pence now, this support line from 2014 would really be outright bearish for the shares. Finishing off with one of Friday's rebound stocks, and that was Range Resources. The stock here temporarily broke the 0.77 pence initial October floor, closed back above it to end last week. So that is a bullish signal, bear trap, a sharp bear trap, in fact. And also there is RSI support here from an August support line, which has been double tested for October. The view now really is that we could head back towards the recent 1 pence plus highs. I think we peaked around the 1.15 pence level earlier in October, and that would be a decent target from current levels. A stop loss could be as tight as an end of day close back below the initial 0.77 pence for October. That's it from me. More updates at spreadbetmagazine.com.